Morning all. How are we all doing? Morning. What? By doing a spin class in this heat, it's not much fun. How are we all doing this morning? Everybody survive FOMC? Morning Martin, Danny, Stevie, JC, Pip, how you doing? Virginia, it's time. Amy, Andres. So, big moves yesterday. Well, big news, not necessarily big moves that have been undone, but big news. So interest rates in America are not over, apparently. So we'll go through all the news in a minute. We'll run through everything that happened in FOMC. God, I got a big spread on the DAX this morning on my Forex funds for some reason. Sorry. Adrian. So yeah, we'll run through all the news this morning. We've got 7 minutes to the open, so I'll start going through the news. We'll pop over and obviously watch the open of the DAX, and then probably have to go back to the news because there's a lot to absorb today. A lot of potential shift in directions coming. So if we have a look at the buyer scorecard, basically, this is the first time I've ever seen the buyer scorecard white. There literally is nothing buy, nothing sell. Every single currency is reading a range bound reading at the moment. So obviously off the back of yesterday. So it's almost like the plane is stalling at the minute, and every time the plane is stalling, they turn the engine back on and it's doing that. It's like we're at terminal rate. Actually might do a little bit more. We're at terminal rate. Actually might do a little bit more. We're at terminal rate. Actually might do a little bit more at terminal rate. We're not going to bring the rates down until probably November. Actually, we're definitely not going to bring the rates down this year. Actually, 2025, we might bring the rates down. That's basically what the Fed has been doing to us. And that's what they did again last night. So fundamentals now on the US dollar, we are where we were before, 5.5, absolutely, 5.25, sorry, absolutely fine. No changes. Inflation, 4%, we know it's come down dramatically. Expectation was, because of the speed of inflation drop, we would get indications of possible rate decline before November, which is what they originally forecast. However, what they said yesterday was they think that it's too early to tell if the impact of the interest rate rises is having the desired effect on inflation. Which is bizarre. They don't seem to be worried about unemployment going up. It just didn't make sense what they did last night. Whack a great move on the DAX before the open. Oops, sorry. Where's it gone? Just had a really big candle putting on the DAX. So yeah, very mixed messages there. So I'll go through financial juice in a bit because there's a lot of information to sort of absorb in there. But we'll have a quick look at today's news first. So there's your GDP for the New Zealand dollar. Came out as expected. Fine. So that is now officially a recession for New Zealand. So they have gone into recession. So they were forecasting still to be in recession. They were a negative 0.7. They've gone to a negative 0.1. So that's fine. So they are in recession. Interest rates have gone up. We should see this flipping back positive. So I don't think it's actually as bad as that looks. We'll have a look at the New Zealand dollar pairs in a minute as well. But that's what we've had overnight. Unemployment for Australia, though, and the unemployment rate for Australia, massive win. 75k on a forecast of 18 for the unemployment change, and a 3.6 unemployment rate. I know it doesn't look like a lot, a 0.1 difference, but that's quite big for unemployment. Unemployment, when you get a 0.1 percentile change, is big. So unemployment 3.6, that's come down. So that is massively bullish Australian dollar off the back of that interest rate incline, and the fact that New Zealand has just gone into a recession. Could have some decent pushes coming on the Aussie moving forward. So we need to be aware of that and keep an eye on this Australian dollar today. 115 today is the main news. Euro refinancing rate, we're expecting that to go up to 4. I don't think they'll do it, but there is a possibility of a 4.25. If we did get that, that would be a massive bull run on the euro. As it is, I would expect a bull run today because they did overprice it to 4.25 last time, or 4 last time, and didn't get it, and it's just not gone where they wanted it to. So they've tanked it for the last 4 weeks. No reason why that shouldn't rally today. So we'll see what happens with that. But that's 115. Then 1:30, an hour before market open, we've got retail sales for the US and the US unemployment claims. Again, if we get an unemployment claims negative on that, if that comes out any lower than 246, we're going to get a big bull run on the US again today, especially after what they said yesterday. Then we've got the ECB press conference at 1:45. So everything that happens here with the refinancing rate, Lagarde will then come out and tell us what the forward plans are for interest rates. So that is 45 minutes before the New York Open. So absolute chaos, basically, from 1:15 today until the New York Open. The market's got every possibility of going absolutely mental. So bear all that in mind. This morning, we've had a lot of movement already. We've got ADRs already lit. So it's impossible to tell what's going to happen. Usually you would expect on a day like this to have a sideways day. We've had a massive move already today. So it might be that we get a massive unwinding ahead of this. So anything could happen today. It's going to be one of those days where you just got to hold on tight and pay attention. So big news day today. Bank of Japan tomorrow. That's going to be big. We've had some news out of Japan overnight, but we'll go through all that when we go through the Fed fund rate and everything. So there you go. I'm knackered already. Just done a 15-mile spin class, and I've had to talk about the news all morning now. I'm absolutely exhausted. And the market's about to open. So we'll watch the DAX. And we'll see what happens. I've got the New Zealand dollar up, obviously. I made a killing on the New Zealand dollar yesterday. Absolute beauty. Made 10% profit yesterday. And this morning, obviously, it's all undone. Back to square one. So another aggressive drawdown control position got on that. I had an opportunity to exit yesterday at 4%. I didn't take it. Was not expecting that Australian dollar news. So we got the propulsion gap bounce there. So if we do get an unraveling of that today, I should be running for the hills on the Aussie New Zealand. Anyway. Morning Shroud, morning Outro, morning Jerry Evans, morning. There we go, market's open. So see where the DAX decides to go today. So there's your 5-minute pre-market. Your 15-minute pre-market is there if you're taking the 15. Okay, long on the DAX. DAX today, I was kind of expecting a little bit of a weak open. I'm not expecting big movements today because we've got the rates today. So I suspect we might have a fairly quiet rotational morning because they're not going to want to put a lot of money into that this morning. I'm just watching my other platform because this data is updating so slow compared to my Forex funds. It's such a different feed. This Robo Forex feed is getting worse. Just have a quick look at where we're potentially going to go today on the DAX. So another bull day yesterday. We came off the monthly highs. Yeah, so I mean, I'll be looking bearish on this today. If we're going to get a euro rate announcement and potentially euro rally today, we would expect stock markets to have a negative impact. So we've got the gap fill that we are still reaching for from Monday. So this is Monday's gap. Stopped out on the long, flip short. So yeah, back down to there at some point. I doubt we'll get a 225 on it unless the euro really, really goes for it, and then obviously it could do. But we'll see. I just installed a new terminal because I just wanted to check the data. Go away. It's got slipped on that. So long stopped out, flip short. What was I saying? Can't remember what I was saying. Gap fill, something about gap fill in here. Yeah, so if we get that big rally on the euro, obviously we'd be looking for the gap fill. But 225 ADR is a big ask. It's going to take an awful lot to get 225 out of it. So we will see. But DAX isn't going anywhere today at the moment. So it looks like it's going to be a double-ended stop out today. Going nowhere by the looks of it, yeah. Off to Madeira for a week tomorrow. Very nice indeed. Have fun. I think it's about as hot as Madeira here in the UK at the moment. Get to take a week off. Good man. I should be doing that in August. Not going to Madeira, but taking a week off. Right, so no movement really on this at the minute, this DAX. So I think what I would probably do today is if we do manage to get down to there, it's probably just worth closing them both out and taking whatever you can get at the open. But it looks like it's going to be a double-ended stop out today. So we'll see if we get any inside bar breaks. But this total whipsaw this. So there's your 5-minute opening range. We've got 40 seconds left on this candle, but range is basically there. If we end as a doji, it's worthwhile replacing and trying again. See if we do get any kind of run. But downside, obviously, there's a tiny little run available down there, which would be a 1.5 bar plus. Upside, if we're going to rotate, I wouldn't expect much more movement than that during the session today. Very, very lackluster. There's no volume. 3 p.m. in Malaysia. Hello all. Hello BBMA. Morning Neo. Where am I off to? I'm off to Croatia. August. Bit of a gap. Oh yeah, got it here as well. Yeah, we jumped up. So right, so we just had I don't know if you saw that. I got that on my Forex funds as well. So candle closed there, opened up there. So that shows you how little liquidity there is in the market this morning. From that candle close, we gapped up because there's no volume in the market. Because there's no volume. Someone requested a price, didn't get the fill. Market had to move to fill the order. So there's no volume. So you're at the mercy basically of whoever's got the biggest bank account this morning and decides that they want to dump some orders. So if you're in this with the pre-market 5 today, obviously you've taken a 1% or you've taken a loss. If you get that 1.5 today, I would just walk away. And to be honest, this afternoon as well, with the amount of news that we're having, we'll have to have a look at the New York markets when New York opens and just see what's happened prior. But there's a high probability we'll get one of those rotationals today as well, because there's going to be a lot of volume going through on all that news on the US as well, retail sales and the unemployment. Put it back up again. Ain't going to go today. I wonder what the DAX order book looks like today. Yeah, very thin. Right, so let's have a look at this news and what's gone on with everything. Keep an eye on that on the other monitor. So obviously, Rates came out last night, 5.25 off of a 5.25 forecast. So that's exactly what we were expecting. US dollar had a bit of a rally. Wrong one. Let's watch euro. Let's look at euro US dollar. So that's my exit on that one. You can see boing, straight down, out. Thank you very much. So that was FOMC. Then obviously this was the end of, or rather the main bulk of the Fed speech. We undid the vast majority of that move, and then we've sat there, and today we've had another push down. So US dollar, obviously big strength off of that. The reason we got the pullback and then that sort of accumulation movement is because most of the comments coming out of the Fed were bullish basically yesterday. So what we were expecting was for the Fed to come out and say something along the lines of, yeah, it's going really well. Inflation has come down very, very quick. Deflation of the housing market is good and everything's fine. So it looks like we've managed to get to terminal rate, and what we should be doing is looking at a decline in interest rates by the end of the year. What we actually got was virtually the opposite. We're going to put interest rates up again at some point this year. And 2024 to 2025, we will start to reduce interest rates. So they've put the reduction in interest rates back, and they've said they are going to further increase interest rates, although there were no votes this time to do anything but freeze. So if we run through the news events, basically, so the vote was unanimous. GDP will be at 1% in 2023 and 1.1% in 2024. So they're not going to go into recession. They're going to miss recession by a long shot as well, which is great. Higher GDP growth, lower unemployment rate, all going well. And less progress on core inflation than they saw in March. Yes, because it came down at 1-something% far too quickly, which is why we thought they would freeze the rates, because it's coming down too fast. It's still coming down at 0.9%. That's massively quick. So in their opinion, though, they don't think what we're seeing with inflation dropping is the actual data that is being reflected. So they think there's a delay or a lag in the data. So this is why they're thinking they might put it up again. This is what worries me. What they're thinking is fine. What is actually happening could possibly be not what they're thinking. And if that's the case, we are going to get a massive fast collapse in the US dollar. So what they're saying is actually potentially really unstably, destabilizing rather. So if what they are thinking and saying here doesn't happen, obviously. So Fed fund rate at a median of 5.6 by the end of 2023. So we're sitting at 5.25. They're saying now the terminal will be somewhere in 5.6. Read into that 5.5 to 5.75. So that gives us another 0.25% increase, 1 or 2 more increases this year. Additional rate increases possible later this year. 3.9 core inflation by the end of 2023. Look at core inflation now, 4. Right? They're saying that they're going to get to 3.9 by the end of 2023. We're on 4, for God's sake, and it came down by 0.9. On what planet do you think you're not going to get 0.1 in 6 months? Doesn't make any sense. 2.6 by the end of 2024. So 2% is the target. So they're estimating that what they think is going to happen, reading into this, is, yes, it's coming down really fast, but it's suddenly going to stop and go back up again. That's what they're thinking is going to happen. The reason that will happen is because the housing market will deflate very quickly because people can't afford mortgages anymore. That will send inflation flying again. So this is what they're worried about. This is why they're thinking of putting the interest rates back up. Medium rate forecast 5.6 and then 4.6 by the end of 24. So they reckon we'll be at 4.5 to 4.75 at the end of next year. So what that says is we are only going to get a 1% drop in the next 12 months on interest rates. That is going to send everybody poorer and poorer and poorer and poorer. The housing market down and down and down and down. And that spiral collapsing. People getting poorer, everything getting worse. GDP will start to drop because people won't be able to spend any money. Companies will sack people. Unemployment will go up. which means they'll have to bring down interest rates, which will drive inflation up. So what they're basically saying here is, yeah, it all looks good on paper. Real world, though, we are still in a very, very, very volatile situation. As Forex traders, all we're interested in, what the hell are you doing with your interest rates? Because interest rates means bullish. Down means bearish. So from what we can see here, it's bullish US, but bad for the economy if you live in the US. You need to move house, move country. So this is the monetary policy. This is the midpoint target, what they call the midpoint targets, basically, the dot plot. This is inflation, interest rates, what they think they're going to be coming down to, and the kind of best and worst case scenarios over the next few years. So as you can see, the 2024, 3.5 is the absolute minimum dot plot coming out. So 3.5 is the lower end of the forecast, and 6 is the upper end of the forecast. That's higher than we are forecasting peak rate to be this year. So there's a massive possible variance in this, which is why the market reacted as it did yesterday. It's like, really? More. So it's potentially massively bullish US dollar. But there's always these caveats. This is a problem with the Fed. There's always these buts all the way along. So Fed swaps no longer consider 2023 rate cut likely. So we were possibly thinking November for a rate cut, which is meaning staying still, bearish to midline, and then properly bearish in November. We're now not looking at that. We're looking at potentially increasing on the way to November and staying where we are. So no more cuts this year. So it's not going to be as bearish as we think with the US dollar, which means that the yen will probably start to weaken further. As the yen starts to weaken further, they will look at intervention more. So we've got a bullish yen coming at some point with some kind of intervention if these US dollars continue to push over the next few weeks. So there's so many knock-on effects with all of this. And it obviously depends as well what happens with the euro rate today as to how that affects all of the other currencies too. So nearly all policymakers saw further rate hikes this year. The DAX is actually starting a bear run. Starting. High, low, lower high, lower low, lower high, lower low. I wouldn't call it a bear run, but it's not going up. Better than anything, because we're short. Some further rate increases likely this year. It makes sense for rates to move higher, but at a more moderate pace. So what they're saying is usually in that case, it's kind of put it up one, skip one, put it up one, skip one. So instead of increasing every month as they have been over the last sort of 12 months, we are starting to slow down the rate of increase, which is that topping effect. But we've still got 2 more increases potentially to come. They haven't made any decisions whatsoever about the July rate at all yet, which is fine. We wouldn't expect that because they need the data for the CPI to come out. Any forecast about inflation coming down this year will contain a big dose of housing disinflation, which is what I was saying. Inflation coming down very, very quickly at the moment is great, but it's coming down because interest rates are high. Because interest rates are high, people will no longer be able to afford mortgages, which means they will sell their houses. When they sell their houses and nobody's got a mortgage they can get to buy that house, they have to reduce the price of that house. Housing prices come down. That means people go into negative equity, which causes a housing bubble pop and a housing market crash. Housing market crash causes inflation rises, which means you need interest rate rises on top. So what they're saying is, yeah, it looks like it's coming down, but we haven't seen the start of the knock-on effect of interest rates on the housing market yet. That's just starting to happen. So this is the reason why they've come out and said they're not going to potentially drop those interest rates down. So it's kind of doom and gloom if you live in the US at the moment. We're not so far away from the destination on Fed funds rates, which is basically the terminal rate, which we thought was going to be 5, then we thought it was going to be 5.25. Now we think it's going to be 5.75. Shouldn't call this a skip. No, that's fine. Risk of inflation are to the upside, so they are expecting inflation to turn tail and rise again. This is what I was saying about the lags. there is not any certainty in our profession about the length of lags. So what they're looking at is the inflation data coming down is lagging and not reflective of exactly what's happening with all the markets at the moment, with the housing market and with the interest rate rises and everything. So they're just saying, you know, everything we see usually is a month to a quarter behind everything. So it's always looking, you're always looking at, right, we've just had the news out on that. That's what's happened. What you need to do now is decide what you're going to do to affect what's going to happen in the future. Again, what they do in the Fed and all banks is very much what we do. They can't predict the future either. So they have to estimate what they think will happen. And this is why they're very careful with interest rates, because they can be incredibly damaging to unemployment and housing. So, and that was, I think, it. Not a single person wrote down for a rate cut this year. That's fine. So they're unanimous in that we are not going to cut in November. We're talking about a couple of years out for rate cuts. Yeah, that's a big difference on what they said we might drop in November. Actually, now we might start dropping 2024, 2025. Yeah, that's a big turn on what they were previously expecting. So that was that. Then we had the GDP coming out as negative for New Zealand. Then we had a load of Japanese news, which was all better than expected. However, obviously, the yen's been negatively affected by the DAX is whipping today. So I'd stop trading the DAX if I were you. Just take the loss and walk away today. It's not going to happen. Then we had obviously the unemployment rate for Australia, 3.6 off of a 3.7, and they're 75k. So they were forecasting 17,000 more people to be employed. They actually got 50,000 plus more than that. So huge difference there. And that was it. So that's your news. So lots to digest. So if we look at what actually happened to the markets, starting off with obviously the US dollar, if we look at the hourlies. So did I just change the DAX over to hourly? I did, didn't I? I'll operate a chart this morning. So yeah, big drop obviously, and continuation strength so far on the US dollar. Not massive. And again, I don't think we're going to get a huge move on anything during the London session until we've got that euro rate. Once that euro rate comes out and we've got the figures on retail for the US and the unemployment for the US, that's when I think we're going to get these moves started. So I think we're probably going to have a big ADR day today on a lot of stuff, but it's not going to happen until we got the news out. So, impact on the US, US dollar yen. Obviously, we had the rally on the US dollar on FOMC this morning, absolute collapse on the yen. And the US dollar has taken full advantage of that, obviously, as we can see. So we were worried about this 1.4, yeah, being the point where the Japanese might get a little bit concerned, yeah. So this has gone screaming through that point there, that 1.4. 1.5 was the last area they started intervention. We're already up at 1.141.5, yeah. So 1.5 increase. Literally in 24 hours. We're well on our way to getting the Japanese a little bit upset. So big move there. US dollar Swiss, we obviously had the big push, and now we've had a bit more of a rally this morning. Swiss franc is going to power up with the euro later. So we should see the US dollar Swiss having a little bit more of a downward movement. But either way, that one could go either way today. US dollar CAD didn't do an awful lot. So we had the bullish move. Obviously, as that US dollar pushes, it also pushes the CAD with it. So kind of sideways. Aussie dollar Swiss, we'll have a look at some Forex pairs in a minute. Risking 10 pips for a 30 pip. Is this called 1 to 3R? Yes. Go to babypips.com, Gulam, if you want the basics of FX and stuff. Good course. So New Zealand dollar. We obviously had the New Zealand dollar GDP figures. That collapsed this morning on the GDP figures. We've pushed back up again and pulled back down. Yeah, so the New Zealand obviously having everything is rallied against the yen. I mean, everything's gone mental against the yen. So the yen is just obviously getting run over. But if you look at all the other New Zealand dollar pairs, not a huge amount of movement on it, a little bit negative, but nothing particularly exciting. The pound pairs at the moment, obviously, we've just had the movement off the FOMC yesterday, but nothing on that yet because we haven't got any real news on the pound. It's having a bit of a rally this morning against the Swiss franc and the yen. The euro today, you're not going to go anywhere until 115. 115, you are going to go somewhere fast and hard. So if you look across the euro pairs, obviously everything against the yen is just dying, or screaming rather. So no real movements anywhere there. Swiss franc yen, a bit of a push. So we've got some ADRs. We'll look at them all in a minute. And CAD yen having a nice push. Australian dollar. So the Aussie came down hard on FOMC. All the money was pulled out and pushed back into the US dollar. Fantastic, we thought. Then the Aussies came and kicked us in the teeth with their unemployment figures. So all the Aussies that started the retracement, it all looked yesterday like everything's off in the right direction. They've reversed it today. So obviously Aussie dollar yen flying at the moment. My new best friend. Aussie dollar Swiss flying, Aussie dollar CAD flying. So we're waiting to see what happens. If we're going to get continued sustained strength in the US dollar, that is going to restrict the movement of the Aussie and slow it down. However, it's had more good news off the back of its interest rate rise, and it seems to be the only currency that's actually reacting properly to its news events at the minute. So we've got big movement, obviously, off of that at the moment. So DAX is just sitting in a complete chop at the minute. So just there's your 15-minute opening range. There's your 5-minute range. There, so we're just inside the 5-minute range. If it can get any kind of movement up into a high or a low today, just sell it up there and buy it there. I mean, it's almost as if you could literally just place a pending order there with a stop under that low, and a pending order there with a stop above that high, probably above that high. And you're pretty much guaranteed success, I reckon, if you can get there. I'm not even convinced the market will be able to get to those limits today. So if I can get a 1.5 hour out of this, I'm taking it. That'd be lovely. If we can just pop down to there, I shall be out. If I can get a break even on this morning, I think that's a job good done. Morning, Monkey Man. According to a poll, Japan will stop the yen decline once the US dollar hits 145. 54% of economists say, 43% say 150. Yeah. So with the yen, the Japanese intervention happens when the Japanese decide that they are no longer happy with it. And it's all to do with the US dollar yen. This is what they focus on. So the last intervention, the way that it goes with the yen is you get a shot across the bow, basically. And that was the first shot when they got to 145. Yeah. They basically said, no. We don't want you above this level. If the market doesn't listen, they then intervene. So when we got to 150, so what we had basically was a warning from the Japanese saying, we are closely monitoring the Forex markets, which is basically their way of telling the markets that they're unhappy with the level of reduction in the yen and we need some help, please. If the markets don't listen, they pump it and they give it a shot, basically, to say, right, this is where we want you to stop now. We were serious about this. What that causes is a lot of big banks and institutions to get offsided and lose a lot of money. Yeah. And they will then recover that money. And what you tend to find is then you get a decline. Yeah. If that doesn't happen, you get an intervention. And that intervention will be 300 plus ADR. It will be an injection of money so big that there isn't a bank or institution in the country or in the world that can stop it, and they will get offsided. And as soon as they start to pull it back, the yen, they will do it again, and they will make sure that everybody gets the message. And then what you find is you get further interventions. It's a little bit like an earthquake. You get aftershocks. So you have the intervention, then you have the second intervention, then you have the third intervention. And by that time, the market's like, yeah, all right. That's what we had here. Sorry, here. Yeah. So if you go back on Financial Juice and go back to the 29th of May, you will see for 2 days, they said, we are closely watching the Forex markets. We will take steps necessary if foreign exchange does not go our desired direction, blah, blah, blah. Those sorts of lines is what they come out with. And then the market goes, yep, all right. And now we've just exceeded that level where they started giving the warnings. So what Bellino's just said, according to a poll, Japan will stop the yen decline on the US dollar yen if it hits 145, is exactly what I've just explained. If we get to 140, I was expecting to have some problems. What we've got is a scream through that level. So basically, they won't have known that was happening until this morning. So tomorrow is Friday. And Monday, I think we'll probably see some rumblings coming out of the yen. So any yen shorts, what you will find is you will likely get squeezed on them until they go, stop it. And then you will just suddenly get out. So any yen shorts that you scale into, I wouldn't put a TP on it. If you're going to put a TP on it, put a TP on it in a big old propulsion gap, maybe 200 ADR away from where your average is, because there's a high probability it will get hit. If you go back and look at those interventions in more detail. Yeah. So ADR on this is 117. That's 582. That's 5 ADR. That intervention there is 561. Again, 5 ADR. 800. Yeah. So think about ADR. This is why we use ADR. This is the normal movement of this currency. That is what happens on an intervention. Yeah. So, oh, I've just moved a order. Which order was that? TP. So yeah, so just bear that in mind on any yen shorts that you've got. So, you know, when you're looking at TPs on it, let's say, for example, we're expecting an intervention to come in. Absolutely nothing wrong with having a TP down at these lows. Yeah, 225 ADR, it'll just go through that in a candle. Potentially. It might not. It might be that sort of movement over 2 to 3 days. But once it starts, it starts. The problem is you can never tell when it's going to happen. You'll be watching the charts and all of a sudden everything will be happy, and all of a sudden at any point in any session, at any time, it will suddenly just go bang, and there'll be a 5-minute candle and you'd be like, what just happened? It's almost like somebody just made a sonic boom go off sort of thing. You won't know when it's coming. If you haven't got your TPs in the right place, you will never get out of it. So you will also find the market will spread to a degree where you're like, your fill, you'll need to go way beyond where that TP is to actually get filled on the order, because there won't be any liquidity in the market. What the Japanese are doing is they are pumping in billions of yen at the same time, which means that every single order in the market for a buy, regardless of what level it's at, is just being eaten up, and they will go until there is nobody left. So it's one of those things that may or may not happen. You will know about it before it happens, because they will tell us it's coming, but they will always decline because they're not allowed to do it. So they will always say, we have nothing to do with any adverse market movements with the Japanese yen. No one else can do it. Everybody knows that, but they will never admit to it. It's like the Russians. War? What war? No. This is a special military operation. We're certainly not going to war. Do you think the rest of the world is stupid? And the same with the Japanese. There isn't anybody else that can do it. So it's like if all of a sudden the pound flies through the roof and the Bank of England go, no, we haven't bought up quadrillions of bonds, nothing to do with us. Well, sorry, who else did it? Liz Truss crashed the market. The Bank of England bought it back again. They have the power to do it. It is just very difficult to do, and it costs them a lot of money. DAX stopped out. Double-ended stop out today. Marvelous. I'm going to leave that alone. I don't think it's worth attempting another go on that this morning. I'll leave the EA running anyway to see what it does. But right, so there's your yens. So obviously pushing hard at the moment. We could get a pullback on it very quickly as well if they suddenly weaken off that Aussie dollar. What just happened there? So yeah, obviously this Aussie dollar movement, don't forget this Aussie dollar, we've had some good news on the Aussie dollar, admittedly, but also don't forget this thing is so unbelievably extended as well. Again, you've got to think about market movement. For the market to continue to move in that direction, there's got to be people willing to take the other side of this order. You're going to stop finding people that want to sell this. So the buyers are literally going to start running out of people that are willing to get the other side of these orders because of the parabolic move here. So, and when that move does start, you see people jumping on board. So there is still, I think, a good possibility of this Aussie dollar pulling back. If it's long-term bullish, absolutely fine. But you still got to pull back to find enough power to start a new leg. So there is still a good chance that these things will pull back. It's just the constant barrage of positive news means obviously people want to buy it. And anybody that's not been in this and not entered in this and isn't stuck in this is going to buy it. It's just a case of, are they going to run out of people that are willing to go the other side of their order at some point? And that's what we're waiting for. So we could find that we do get this last hurrah out the top and that's it. Then we suddenly get this 2 to 3 day drop. You look at something like the Aussie dollar, New Zealand dollar on the daily chart, looks like a dream yesterday. Absolute dream. Brilliant. Here we go. Oh, news. So we're back basically up at the highs where we were the day before we actually started this pullback. So this is 14 days. And that's all we've got. Yeah, it's not even a profit take. 23 retracement. It's a flag. So we haven't even got down to that shallow, what I class as a shallow pullback in a trend. Still haven't had that profit take on it. So just the worst possible case of news events, isn't it? Like the New Zealand dollar completely weakening off of a positive interest rate, followed by the Australian dollar positive interest rate, the market reacting positively to it. Nothing but positive news on the Australian dollar. Finally, we get some movement because the US dollar powers up. Then the New Zealand dollar has a negative news and the Aussie dollar has a positive news. Couldn't make it up. It's just not the right conditions for short in Aussie New Zealand. But hey, morning, Brian. So there's those. ADRs, obviously, we've got a lot of weeklies hit now and a lot of Aussies hit. So yesterday, just to update you on what happened yesterday, banked 10.5% yesterday. So big day. Bought the account basically pretty much back to flat for the month. So there's a couple of bits now, obviously, with this Australian dollar. Obviously, it's all this exposure on the Australian dollar that's what's causing the problems at the moment. So the euro odd, that could easily completely unwind today and be gone on euro rate increase. So I'm not too worried about that. Aussie dollar, US dollar, again, that is a short against the US dollar. So US dollar long, not too worried about that. We should be getting some positive move on the US dollar. Doesn't matter what the Aussie dollar does. It's not going to be as strong as the US dollar. So if that US dollar does rally, that is coming down. So that's not really a problem either. Aussie New Zealand dollar. This is the sticking point. So I've put another aggressive drawdown control position on this morning, which is about to get stopped out by the looks of things. But the average on this is only sitting at 125 ADR. So again, it's really easy to get out of. However, obviously it's still in a squeeze. So I had the option to get out at 4% yesterday. I didn't take it. I decided to bank the profit to bring the month back to level, because obviously the plan was and still is, if we do get a pullback on this move, i.e. reverse, so looking at the daily chart, we've got the reversal alert there, yeah? So the idea being we get the reversal alert, retest, drop. Yeah, the idea being is all that lovely profit is banked there. On the retest, add again, and then take it again. So take a second bite of the cherry back down to there. When that comes into profit, close the whole lot out, go flat on it, happy days. That's the plan. The plan got scuppered by the Australian dollar unemployment. So this will either work or it won't work today. We'll probably get some limit orders trigger off at those highs, because anybody that shorted yesterday before the news is going to be wanting to add back into those positions. Whether or not there's enough sellers to overpower this new buying rally that started, we will find out. But there's a good chance we might just go into an accumulation up here and then come back down and do a proper profit take move on that leg. So wait and see. Those are the cards. Got to play the game. Aussie dollar yen now, also something needs to have aggressive drawdown control looked at. So added one position onto that as aggressive drawdown control this morning. That one I put the stop on. So with these aggressive positions at the moment, I'm giving them plenty of room, 1% risk. The standard trades, 1% risk, looking to get that move back on. So that only needs an ADR. Again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, day 11, straight up. This is exhausted, this market for the Australian dollar. That's what we've got on our side. And now we've got obviously the fact that the yen is getting squeezed on the US dollar, meaning that the yen will start to fight back. The yen, they will always start to fight back before they start to intervene, because it's costly. Intervention costs them money. It sets them back in their plans to get out of any economic problems that they have. So they will always try and fight back with normal market movement first. So if there's weakness in that Aussie dollar and this rally ends and we do get a bit of strength coming through, this will fast move back down to where it is there and you'll be able to get out of it, no problem. This is what aggressive drawdown control is all about. Finding, after a stretched period, that final point. It's like your sniper entry. It can't keep going up forever because the banks have got to bank the profit. It's just obviously when you get more news, the people that aren't in it get in it, and they cause the squeeze to continue. So there's a few there, obviously, which are in DD, which will have to be watched, but everything else is just normal business as usual. So yesterday, if we have a quick look at yesterday and what I banked, just so you can see. Aussie dollar CAD, there was nothing. Aussie dollar Swiss, there was nothing. Aussie yen, that's just been doing drawdown control, obviously, same as, right, so Aussie New Zealand. So there was an aggressive drawdown control position there, which was something like a 6.3. That was a 9. That was a 9. No, sorry, that was a 5.3, which was taken by the EA. So that was just the next position on top of that one. There was another 9 there. Yeah, so closed out 3 aggressive positions and 1 taken by the EA there. Yeah. So the EA will add back on, already has actually. No, that's my position. So the EA will add back on that position that I took off for it when it gets back up to here. I've got the aggressive on. So if we get a new lower high put in today, i.e. this reversal alert on the hourly, we get that M pattern reversal with a lower high. These new position the EA will take and my aggressive drawdown control position will be up there. I'll be able to exit the entire lot down there. So I'm hoping for an M pattern today, so there's 2 scenarios. Either we get an M pattern reversal, i.e. the profit take starts on this huge move, or we get an M pattern reversal to form a range. I don't care which. If it's that or that, happy days. I'm out, all done. I haven't done the maths on it yet. I'm pretty sure I'm probably slightly negative on it. Don't really worry about that. What I worry about is what my portfolio says. So whether I make money on something is nothing I can do about it, is it? It is what it is. So, so those two scenarios will obviously play out in my favor. A new parabolic leg isn't going to play out in my favor. Nothing you can do about it. So that was closed out yesterday. Aussie US, that was closed out yesterday. So I had a position there, close in profit. That's been added back on. CAD Swiss, nothing on that, nothing on that. That done. Drawdown control. Euro CAD was nothing. Euro Swiss. So Euro Swiss exited that yesterday as well. So that was that entry on AH1M5 out on the top of that propulsion gap. That was ahead of the news, actually. We already looked at that one yesterday afternoon. Euro pound, nothing there. Euro New Zealand. Euro US dollar. So that was an H1M5 entry off of ADR as well. Straight out on that on FOMC in that propulsion gap. A nice, quick, easy one. Pound odd. First entry taken on pound CAD yesterday as a short. Thought there was more that I'd banked yesterday, but maybe not. New Zealand dollar CAD out on that one. So that's TP'd this morning. So that was the entry yesterday in that propulsion gap. Out on that one in the middle of that propulsion there. So that target. So again, reason that target was there was because of that. Yeah. So pushed out, big propulsion move, broke the new high, propulsion gap, retest, add to positions. So get out as they're going to add to the positions. Can't really go wrong. New Zealand dollar Swiss. Obviously that is if we're going to have normal market structure. New Zealand dollar US dollar. So there was an entry there on that one. H1 M5 straight exit. Got out a bit quick on that. Could have got another third on it, but this was all happening so fast in FOMC. I was basically sitting there last night watching my P&L. Anything that got pretty much 0.5% was just take it, take it, take it. So that was 0.5% profit got taken. US dollar CAD. There's one there on US dollar Swiss. H1 M5 entry out at the top of that propulsion gap. Obviously, these all carried on. The reason I got out on these, this is the FOMC spike. This is the press conference. The reason I got out on these on the spike is there's so many times we've seen an FOMC candle like that, and then we've seen a press conference candle completely reverse. And I posted it in Telegram, careful, Fed's going to start talking, they could completely reverse all of this, and they have done many times. That's the reason I got out there, because if the Fed reversed it, you're not going to get any profit. And there's the option, obviously, of the US dollar then tanking. So the Fed could have come out and said, here's our interest rate rise. Actually, what we've decided to do is next month, drop the interest rates. US dollar would have gone through the floor. That could have happened. We don't know. You never know what's going to happen, do you? So take the money when it's there, and don't get greedy. If you get greedy and go, actually, well, I reckon the US dollar is going to rally off the back of this up to there, and it doesn't, you could be in a 3-week decline. Out. Take it. Bank it. US dollar yen, nothing on there. So that's what I banked yesterday. So looking at ADRs, there's a lot of opportunities. So today, obviously, anything you see on the Aussie dollar is off the back of the Aussie dollar rates. So Aussie dollar unemployment. So look for levels, look for reactions. But as we know, that is a big positive for the Aussie dollar. Their unemployment figures are very, very good. Weren't expected to be that good. Therefore, we've got a rally. However, we are at the peak of a rally. So eventually it's going back down again. So we'll have to wait and see what happens with these Aussies. But Aussie dollar yen massively extended. So I've just got an aggressive drawdown control position on that one, as I say. Going to take that off if we get much above 150 today. So if that continues to rally, we'll have to wait and see what happens. But you've had your reverse alert obviously already on this one. There's the reverse alert that's gone in there on M5. There. So there's your entry. Reverse alert. So that's extended. We've got the Aussie dollar, New Zealand dollar, as we know, that's up at 150 ADR as well, still pushing. Again, we're getting out some of that. CAD yen extended, Swiss yen extended, all these yens extended. If they're extended on the hourly RSI, there's an entry. If they're extended on the ADR, obviously you've got an option to get in as well. So Euro odd extended to the downside. That one's already played out. M5, you've had your reverse alert on that one. So your entry actually was there. So Euro today, obviously we've got the news. Again, I don't expect much movement. So where we've got to on these ADRs, I would kind of expect them to sort of hover for a bit until we get that US and European news coming out. Euro yen, still pushing. Again, Euro yen, this has got potential to go crazy today. I'm just going to stick a TP on that. Very conservative in the hope that we get some kind of whipsaw. Don't forget, the Euro rate announcement today comes in two parts, the same as FOMC. So we have the announcement on the rate, then we have the press conference. So we've got the announcement on the rate at 1:15, then the press conference at 1:45. This is what decides the future direction, not that. Yeah, this will make the market move. Yeah, so you saw the spike on FOMC, and then you saw the retracement very, very quickly. Then you saw the press conference. Yeah, so you're going to get the same move. So we'll get the movement here, hence me putting in a TP there. So if we get a negative reaction or a positive reaction or a whipsaw on the euro, I want out. And then whatever the euro wants to do after that, I don't care. But euro potentially, depending on what Lagarde says, will rally today. So some of these euros, obviously, though, you can see we've had a downward movement of that one. That one's gone absolutely nowhere. Euro Swiss is already pushing up. So they're all getting towards ADRs already, but it's going to make no difference if they want to rally them. So, so Euro Yen extended to the upside. Euro New Zealand, obviously, we've had an ADR hit off of that, off the New Zealand dollar weakness. That one's kind of already come down, though. Wouldn't have had a target hit out of that, straight into that propulsion, and they brought it back up again. So, but that was your entry on the ADR reversal. Pound yen already extended. Just had the reverse alert on that one. So you do need to get into an aggressive on any of these. It's difficult to tell what's going to happen with these yens. Obviously, with US dollar powering up, the yen weakens. With US dollar weakens, the yen powers up. So obviously, this is because of the US dollar. If we get decent retail figures and unemployment figures today on the US dollar, and that rallies again, these yens are going to weaken further, and we're going to get more push on them. That's when the Japanese are really going to start to moan about it tomorrow morning. So I wouldn't be surprised if financial juice tomorrow morning. I'm not talking about what the Japanese said overnight. So just be careful, mean reverting these yens. And obviously, if you're in any yen shorts already, just keep your spacing decent. Don't get too aggressive. Pound New Zealand's gone nowhere. That's come off of ADR. So that one's already played out if you got into it this morning. It's already repainted the reverse alerts because it's just gone into an accumulation. But your entry... No, you haven't had an entry off of that. Sorry. So this will be first entry this morning because the reverse alert was there. That would have been your entry short. That's a nasty, nasty reversal. But there's one going in right now on the pound New Zealand. So this New Zealand dollar looks like it might be powering up ever so slightly. It's certainly not weakening any further, is it? So little bit of strength coming through. So yeah, New Zealand dollar yen is the only one that's extended on ADR. Entry gone in there already, and that is an H1M5 entry as well. It's extended on the hourly, and you've got US dollar yen as well. So that's extended. Pausing at the minute. Again, that's kind of what we should be looking for today until we get the news later this afternoon. RSIs, obviously obvious. It's all yen based. The yen, massive weakness. So any RSI extensions that we had yesterday have all played out because everything that was extended on the RSIs all got reversed yesterday with the US dollar movement. So everything you've got extended here is all yen, and it's very extended. However, we would expect it to be because we got unexpected bullish movement on the US dollar, and obviously that's going to weaken the yen. So, however, if you look at all these US dollars, it's really going to wait. We need to wait. When the news comes out later today, we'll have a much clearer understanding of what the market is going to do with the US dollar. So at the moment, we know yesterday was bullish. We had bullish movement. We haven't had any bearish movement. They haven't undone everything, and it still looks like the US dollar's bullish. If the retail sales come out as not too bad, stroke slightly bullish, and then we get the unemployment claims going down, which will be bullish for the US dollar, and they are forecast to go down as well. That is when we will start the proper move, I think, on the US, and we will see what the market's intention is with the US dollar. Don't forget, for the last probably 2-3 months, every time we've had bullish news on the US dollar, we've had that sort of reaction to it. Every time we've had bearish news on the US dollar, it's fallen out of bed at a rate of knots because the market has been waiting for them to announce that peak rate. Now they haven't announced the peak rate, and they've said, we've got a bit more to go, guys. It's difficult to tell what they're going to do with the US dollar because their positioning on the US dollar, if you look at the COT report, is already bullish. So it's not as if they're going to suddenly pile into this at a rate of knots. They're waiting to pile out of it. They have been waiting to pile out of it for the last sort of 6 months, but they haven't because the Fed keep changing their mind on their interest rates. So it's hard to tell whether or not they're going to want to continue a rally on it. In theory, they should do what was said yesterday. Whether they do or not, we'll have to wait and see. Aussie New Zealand's 150 ADR, just about to stop out on that aggressive position. So I'll be looking at getting another one on up at the highs. See if we can get some resistance bounce. We've got a monthly high as well. No, sorry, I haven't. That is the monthly high, isn't it? That weekly one, yeah. So yeah, back up. We're looking for another position up there. See if we can get another one on up there. Reversal alert. So just be watching, waiting for the next alert to come in on the 5-minute chart as we push. Yeah, so loads of those, but obviously all yen based. The only thing we've got extended that isn't yen based is the pound CAD at the moment. So that one is extended on the 4-hour. Just got over the 70 line, and obviously got an entry on that one off of the hourly extension, which was yesterday. So Canadian dollar will rally off the back of the US, bringing obviously the pound CAD back down again. Oil didn't make any progress yesterday. I was expecting a bit more of a bullish move off of oil yesterday. It didn't really give it. So we got the barrel counts come out yesterday, as we always do, 3:30 on a Wednesday. It had a negative reaction to the barrel counts. The long, I've still got my long on, although it's highly likely it's going to break even today, unfortunately. So I'm on long from here, basically. I'll break even on it. I'm very close to break even on it this morning by the looks of things. It hasn't triggered yet, but it's not far off. So any more downward movement on that, I'm out. We haven't had the rally. So, yeah, we're not getting a rally. We've done a 50% retracement on that down leg off of this triple bottom. It's just not able to get any traction. I've had no forecast. I've heard no adjusted forecasts or anything on oil from Goldman Sachs or any of the big boys as to what they think oil prices are going to be. Last forecasts were $95 a barrel by the end of the year. We're 6 months in. They put those forecasts in December. I would expect if we're going to hit $95 a barrel by the end of this year, you'd think in the last 6 months they might have wanted to make some progress towards it. So going back to January, that's February. But yeah, going back to, let's look at the 4-hour chart. So January this is Christmas basically. So this is where they came out and said, looks like this year we're going to get to $107 a barrel. Then they reduced it down to $95 a barrel. Either way, that's 90 at the top there. Yeah. So you can see, obviously, we want to be at the top of the chart by the end of the year. That's why they said it. We were looking at that being a new peak formation high. What we got was a double top. Since then, we got a range and we were like, oh, okay, now it looks like they're starting to move because we had a low, a high, a lower high, a double top, a double bottom, a lower high, a higher low, symmetrical triangle formation ready to pop. We were expecting that to be the start of the move. It collapsed. Everybody here was like, what the hell? Okay, and then we pushed up, we gapped massively into a double top, failed. We just haven't managed to get any start up to that $95 a barrel. That is still the forecast. We're now 6 months in from forecast where we started here, and we're lower than where we started halfway through our move, apparently to $95 a barrel. It's not going to happen, is it? It just doesn't look like it's going to happen. So you just have to call the market wrong on this one. They're wrong. It isn't going up. And we are struggling to make any progress whatsoever on oil. It's obviously in a bear move, but there is no real bearish direction either. So if you draw a line from where we started the forecast at Christmas, that's really all we've done. ADR on this is 26. We've moved 4 ADR. In 6 months, we've moved 4 ADR, 100 pips. So you can kind of take this, I think, in any direction you like at the moment. It's just your movement is, we're not going anywhere, bang. We're not going anywhere, bang. We're not going anywhere, bang. So you just got to wait for those big, strong moves to come in. So I've got the long on at the moment, expecting the bang up into here, and that's where I'm getting out, because if it gets there, I can't see it going further. And if it does go further, we know where it's going. But when it gets there, highly unlikely it's going to get any further, is it? So you've just got to look at the support and resistance areas and think, right, if I've got a long bias on it at the moment. If it gets below there, invalidates my move, I'm going to go for there. You've got to hold it, because this thing's so volatile on an intraday basis, you can't really trade it intraday. So it's got to be you playing the swings on it, and you've got to just hold on to it, which is what I've done. I've got into it here. It moved up. I was like, happy days. As soon as we got that leg up, I moved it to break even because I thought that it was started, and yesterday it proved me completely wrong. Fine, take me out. If you want, I don't care. That's basically oil. It's absolutely impossible to predict any direction on this thing. But as you can see, if you're trading propulsion gaps, there isn't a propulsion gap you've had that hasn't been hit. So every single propulsion gap target that has been in play is just getting hit. So it's coming back up to here, I can say with pretty much 95% certainty. Where it's going to go when it gets there, I haven't got a clue. But if at least propulsion gaps on the way, you can pretty much guarantee within a week or two it's going to come back to them. So if you want to try and position trade in the range, I don't think you'll have a problem. But this range will at some point potentially turn into that range again, which means if you're targeting propulsion gaps down here, like you were there, you might have to wait a while. And when I say a while, we're talking 2 months. So yeah, it's just not conducive to trading oil at the minute, because it's not doing what it's expected to do. Supply and demand rules are not applying. Barrel count rules, which should affect supply and demand, aren't making any sense. So just leave it. From the Canadian dollar's point of view, obviously this drives Canadian dollar movement a lot. You've got to say it's negative, which is bearish CAD. However, we've got a bullish US, which is bullish CAD. So the Canadian dollar, you really have got no way of telling where that thing's going to go at all at the moment. It could go anywhere. But if you get a rally on oil, you'll get a rally on CAD. So where we are at the moment, it's a triple bottom bounce. It's got to be bullish from that stance. So you've got to be bullish on the CAD as well. So we'll see. Morning, John. So that's pretty much all I've got for you there. Nobody's asked for it. Do the Japanese only intervene the JPI during their market open hours? No, Virginia. So the Japanese will intervene when the Japanese intervene. We'll have a look at them in a sec. DAX managed to just about get a break of the high. Just not going anywhere, is it? Gold, obviously, yesterday, we made the new low. Gold's looking very much like oil, obviously, at the minute. It's very, very similar. We've managed to tap back into that low, and it's rejecting. Yeah. So to get back up here, that's got to be weak. It's a US dollar cross. So if this is going to get back up to those highs, that US dollar has to weaken. If the US dollar gets bullish news today, we're going to break out. And if we're going to break out, we're going to go into price discovery. And if we're going to go into price discovery, there's nowhere to stop until you get all the way down to there. Potentially that accumulation as well. So propulsion target. 175 ADR, I can't see any problem with that. If we get US dollar positive news this afternoon, 170 ADR to the downside, either today or in the next few days, I would say it's a very easy target. So this was our last area of balance. We had the price discovery, balance, price discovery, failure, and that's where we started going into that range. So these are your last two areas of balance where the market was happy to conduct business. Where I'll be looking for them to take it next. When we get there, obviously, it depends on the next news event. It certainly doesn't look like you want to be buying gold at the moment. It's a sell. I don't trade it because it just moves too fast and hurts me. So yeah, the Japanese intervention. So if we look at the US dollar yen moves, so that one happened at 4 o'clock, which is 2 p.m. UK, which is half an hour before the New York stock market opened. Designed for maximum impact, yeah. That one there happened at 8 a.m., which is 6 a.m., which is in Japanese time. That's in the Asian session, 2 hours before we open in the UK. That one there happened at 12, which is 10 a.m., 2 hours into the London session. Yeah, this is what I say. You will be just sitting here. You either wake up in the morning and go, what the hell? You'll either have an absolute bucket load of profit, or you'll be stopped out, or you'll be in massive drawdown. Or you'll be sitting here trading away as normal, watching the charts, and all of a sudden your ADR dashboard and your RSI dashboard will just go ding, 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 ding. You look at your charts and go, what the hell was that? Yeah. The first thing people say in the Telegram group, what just happened? First thing I do is go and watch that financial juice. Yen extends drop to 1% against the dollar as traders prep for the Bank of Japan. Right, there you go. Yen extends drop 1% against as traders prep for the Bank of Japan. So exactly what I'm saying right now is what the rest of the world is now doing. Right then, yen, come on, what are you going to do? Bank of Japan. Let's just keep the ears open, because as soon as we start hearing those rumblings, you do not want to be anything but short everything against the yen. So if you've got any longs on, XXX yen long, just want to get out of it. Not necessarily now. I mean, it could come down and then go up and then come down. So until then, but when the Bank of Japan has done it, if you are caught the wrong side of it, you need to be out of it, because what happens after intervention is nothing but a collapse. Yeah. And then we recover. It's like the world, the world forgets. It's like, no. And then all this is the Bank of Japan going, last time we were here, we said, don't do that. And then you forgot. We're saying, don't do it again. And then we'll do that. And then we'll forget. And then they'll kick us again. They do it every year. Because, and the reason they do it every year is because they stubbornly will not increase their interest rates. They've been at negative 0.1 for 6 years. It's like a naughty child. It's like no matter how much you tell them that if they don't do something with their interest rates, they will continue to fall down a rabbit hole and disappear into earth. But if you carry on doing it, your currency will deflate forever. Because if I put any money into your bank, I'm going to get a negative return on it. Do you think it's advantageous for me to buy any yen at the moment? No, but there's no buts about it. If I put all my money into the New Zealand dollar at the moment, I can get 5.5% on it. If I put it into you, you're going to take 10%, 0.1% of my money away. What don't you get about this? Why do you keep thinking I have to intervene and I don't understand? It just nothing makes sense. And this is why when they say we've done nothing, we didn't intervene, it's like, come on, you're stupid. It's like the naughty child of the FX market. But they are a very, very powerful child. So you have to, when they talk, you have to listen. So you want to be that way against the yen. When? I don't know. We could be talking weeks. We could be talking months. It could happen tomorrow morning. Yeah, it'll happen when it happens. We won't know. They will tell us. You'll know when. You'll know when it happens. And obviously, you may when you get that initial intervention, you will get a pullback on it. There will be an aftershock. And if you need to, make sure you use that aftershock to get out of anything that you've got positioned in the opposite direction. And also, don't forget the first shock is not always the one that is the killer. It can be the second wave. So, oil, surely anything that doesn't really rally convincingly when a production reduction is announced has to be a weak market. Yeah. This is what I mean. It doesn't. We had loads of OPEC news before FOMC yesterday. Back here, Visa's CEO was right as well, wasn't he? Look, the Fed is likely to raise rates by. He was right. He wasn't right with the FOMC yesterday, but he was right in the fact that they are going to increase rates. So yeah, well done you. Yeah, so we had all this OPEC plus oil output to fall, oil demand growth to slow to 400,000 barrels a day in 2028. So it's the decline of oil. Yeah. We don't need it anymore. Yeah, we've got electric cars. The biggest thing that we do with oil is refine it into petrol. Don't want it anymore. I haven't been to a petrol station for 3 years, apart from to go through the car wash. It's the only reason I go to a petrol station. I have no other need because I don't use petrol anymore. And none of my family use petrol anymore. My mother-in-law's still got a petrol car. Apart from that, the rest of my family are all fully electric. Guy over the road just bought an electric. Guy next door's got a Tesla. Yeah. We don't have petrol anymore. Why would we need oil? If the demand for oil is reducing, you can't charge as much for it. Therefore, oil prices are slumping. And this is what OPEC are forecasting for a continuation. So the question has to be asked, where is the bottom on oil? We're at $67 a barrel. So what's it cost to produce a barrel of oil? Wherever it costs to produce a barrel of oil, let's say it's $9 a barrel, somewhere above $9 a barrel is where we will hit rock bottom. So, yeah. Who knows? Yeah, certainly not good, is it? For our friends that produce the oil, who will need to start producing holidays because we won't want to buy their oil anymore. And if they want to buy those gold-plated Rolls Royces, they're going to need another income stream. Pip from the Forge, they can intervene anytime. Last thing intervened was during the oil session. Yeah. Pound yen, 5-minute reversal. Yeah. That's one in there. So ADR is my average, but again, you know, don't use TPs with these yens if you're shorting them. You know, these are your paydays. If you're in a couple of yen pairs with 2 or 3 positions when they intervene, just go and make a cup of coffee or take the dog for a walk. Don't go, oh, I'm break even. Get out. Go and do something else for an hour or 2. Then come back and look at that candle. Don't get out because it's hit your break even. Get out with a big bucket of cash. Even though I'm talking about it now, and obviously the market is also talking about it now because we know it's coming. Yeah. It could be days or weeks away. Japan police arrest Chinese researcher on suspected leak. So yeah, it could be many, many weeks away. We've no idea, but they will not allow it to continue. George, question: is it more reliable, stable to leave the aggressive mode set to false on the market reversal alerts indicator, or just as reliable? So the aggressive mode on the market reversal alerts indicator was designed for scalpers. So for those that want to scalp the markets, basically, all it does is you need less movement up and down or through time before it will give you a new reversal alert, basically. So it just triggers the alerts faster, yeah, which is what you need on lower time frames. And I'm talking scalpers, M1s, M5, people that are in and out with stop losses. For position trading, in the grand scheme of things, if you're using aggressive mode, you might have got in there instead of there. So in the grand scheme of things, it's going to make very little difference long run. I wouldn't worry. I don't use it. Again, market reversal alerts indicator has got so much bloating in it. I don't use any of this. It's all stuff that people asked for. When I first started, this was the first indicator I kind of commercially developed, if you like, or I developed myself and then decided, well, other people might want it. If they are, I'm going to need to support it. So then I'll charge for it. And I put it out there and it became massively popular. But in doing that, obviously we had a lot of people saying, can it do this? Can it do that? Can it do the other? And at that point, I was very, yeah, okay, I'll do everything for everybody. So it became hugely bloated. Then someone said, I want to scalp with it on the volatility indexes because I'm silly and I want to trade it. I want to trade synthetics, which the brokers use to rip everybody off. So I made all these adjustments to it, and I've never used any of them. Like the higher time frame things it does, I don't use any of it. It's really useful and it works very, very well. It's just not how I trade with it. So you need to play around with it. And the best way to test it is to stick it in the strategy tester. Just go into indicator, use it in the strategy tester. And use different settings and watch what it does and watch how it works. And you'll see the difference between the two versions or the settings that you're testing. And you'll be able to decide whether or not, depending on how you trade, whether it fits with you. Because there's no right or wrong. Every indicator in the universe lags. No indicator in the universe predicts future. So all indicators do is show you a historical condition that has occurred. How that helps you personally is down to you personally. For me, I could trade naked charts with no indicators on. The only thing I really want is ADR. I can see propulsion gaps. I don't need them painted on the chart. I can see where there's a big candle and I can see if there's 2 wicks that haven't touched each other either side of it. I don't need any indicators really, but they are massively useful for speeding up your analysis at a glance. I can go, yeah, on this thing, there's really good targets to the downside. It's highly likely it's going to come down at some point. The reversal alert, tells me when there's been a structure break. I can see a structure break. I can see M patterns in the market very easily, and W's. Yeah, I can see where there's a break in structure. But whether you prefer to have more of the break in structures shown to you or less is entirely up to you. It's not going to make you a better trader or a worse trader. Again, everybody asks me all the time in Telegram, what's the best setting for the market reverse alert indicator? There isn't one. It shows you when there's a structure break. There isn't a setting that's going to make it work any better. It's just showing you what's happened in the past. I've no idea whether the next candle is going to go through the roof or not. Neither does that. It just shows you what's happened. So if you get to a level of resistance on the weekly, which has a level of resistance on the monthly, i.e. that's a double top, and you get back there and you get a reversal alert, that's a pretty good signal to take. I've no idea if it's going to try a false breakout, then come back down again and give you another reverse alert up there, or whether that's the one. No one on the planet can tell you that. The indicator, whether you have it set to aggressive or non-aggressive, isn't going to help you. What is going to help you is the fact that you take a trade and then either take a profit or take a second entry, average yourself in, and then get out. That's what's going to help you, removing the thing that stops you losing money. Whether the indicator's on a setting or another setting doesn't make any difference, does it? However, if you're scalping and you're using stop-loss-based strategies, you will probably find there will be a better setting for you than not. But I don't know what that is. People have to decide that for themselves. That's one of the reasons I like the no-nonsense Forex stuff on YouTube, because he's very much an advocate of teaching you what a strategy is, what the components of a strategy are, and how they fit together. He never gives you an exact strategy. He shows you what parts of his strategy are and how they all work. But it's very much a case of designed to send you off on a mission to understand how everything fits together. And that's kind of what I think you need to do with any indicator, mine included. ADR, which is the best to take, the 100%, the 125s or the 150s? Which day of the week was it and which instrument? I'll tell you, because it depends which one of those it stopped at and reversed at. I don't know when it gets to 100 if it's going to do that or if it's going to do that, because there is an odd here that says it could do this, this, and this. There's an odds that it can do that. The odds of it when it gets to anything are always 50-50, aren't they? So there's no better, worse, there's different. That's all there ever is in trading. Everything's different. Trend lines are different. Support and resistance is different. It's just different, but not right, not wrong. This is what everybody gets stuck on. This is why the hunt for the Holy Grail exists, because what I'm looking at isn't working. So I need to find what does work. And then you'll find something that does work for a few weeks and then it stops working. So that doesn't work. So I need to find the next thing that works. And you just keep going through that cycle for your entire life. There's people in the Telegram group who I have seen on Forex Factory for 10 years, still system hopping. I know they're system hopping because I've seen them on Telegram, on Discord and Forex Factory forums. And they're now in my group. So they're still hopping, still system hopping. Yeah, it goes on until you suddenly realize that system hopping is what's making you stop being profitable. Yeah, and that's when you realize that you are there. That is when you stop system hopping. That step 3, that eureka moment, that conscious incompetence is the point of trading where you know you're doing it wrong. Yeah, it's the next level. It's incompetence is basically, I'm going to buy an indicator, put it on a chart. When it gives me a signal, I'm going to press a button. I'm going to get stopped out. Then I'm going to moan at the guy that made the indicator because I've had 10 trades. They've all gone wrong. It doesn't work. It's not wrong. Nothing wrong with the indicator. The indicator is telling you a past market condition. You're incompetent. When you realize that you're incompetent, and that stage is usually a year to 2 years into trading, when you've bought 10 courses, you've bought 50 indicators and 5 EAs, you suddenly realize that you're incompetent, but you know you're incompetent. So there's obviously nothing that works. So what does work? That's the eureka moment. From that moment on, you become break even to profitable. But most people never get there. because they're trying to find the setting in the indicator that makes them profitable. There is no setting in the indicator that makes you profitable. The RSI works really, really well sometimes, and then it doesn't. And when it doesn't work, it really doesn't work. So, okay, well, I'll tell you what I'll do. I'll use the 80 level. All right, fine. The next time it gets to the 80 level and gets embedded and then shoots off on a parabolic move, change it to 90. Then change it to 100. It'll never hit 100, obviously, but you'll never take a trade. But maybe change it to 95. And you might take one trade a year, maybe two. And I'm pretty sure you'll get 100% strike rate with it, but you won't be profitable because you won't take any trades. You won't make enough to pay the mortgage. This is never-ending cycle of that sort of thing, isn't there? So that was a long-winded answer to that question, wasn't it? Which is up to you. Afternoon, Astro. Morning, Astro. Soren, keep up the good job. I'll try. Blew an account. Keith, blew an account the last time. Haven't touched it since with oil yet. George, you're using it as the H1 hedging system. Yeah, again, I'll probably answer the question, isn't it? It doesn't really make any difference. It's the spacing. Any type of position trading strategy, spacing is more important than entry. The reason for entry is the reason for entry. The first entry you take, it's the spacing between those entries, which is really going to either kill you or not kill you. Obviously, in a squeeze, everything's going to kill you. There's nothing you can do. So, but yeah. But that's why I don't trade oil, Keith, or gold, because gold is one of the things that consistently kicks me in the butt. So stop trading it. And you've obviously identified oil as one of your nemesises. Don't trade nemesises. Yeah, if oil is something that you just consistently get hit with, stop it. You remove that loss from your portfolio, you become more profitable. Simple as that. LCM must say, I like how you are honest to the fast food nation. Fast food generation, yeah. I'm not honest. I'm just telling you what my experience is in this market over the last 15 years. Yeah. If I was selling you a course for 2,000, I wouldn't be saying any of this. I'd be selling you a course for 2,000. Yeah. The reason I'm saying all of this is because I don't sell a course for $2,000 because I've bought them all and none of them work. So yeah, I'm not being honest. It's just being real. It's the life. That's life. Things like this hurt badly, and you will go through it. And everybody needs to see the pain of trading. Yeah, there is nothing at any point. Yeah, the problem with something like this. Yeah, everybody goes, oh, look at that breakout and continuation. I would have made. Well, not a lot, actually. You would have made 5R on it. So that's 5R if you'd have taken that breakout there and held it. I would have made 5R on that. No, you wouldn't. There's no way on God's earth you'd have held that for 9 days. Every time this thing put in a pop, you'd have gone, I'm getting out. So you'd have been out there. You'd have made that. You'd have made 1.5R. That's the maximum you've made on that opening, that breakout there. 1.5R. Because as soon as that thing started coming down, you'd be like, oh, it's going to come back down to here. And you'd have got out. You'd never held it. You certainly wouldn't be in it up here. Unless you're a bank. Because every time that happens, you just pile another 25 million in and push it back up again. The only people that ever make money in this industry are banks. Or the people that trade like the banks. Which are the people that don't put orders in the market to stop them out. The real world. Wayne, my trade manager is adding my today and yesterday profit together under today. Is there a number of chart restrictions? It was fine until I added more charts. I don't know. You only have one trade manager. You don't put more than one on. DAX is just nasty. There you go. Did anybody do what I said earlier? What did I say earlier? If it gets down to there, buy it. If it gets up to there, sell it. Because all you're going to do today is that. If I was paying attention and not in here, I would have done that over there, but I didn't. I didn't see it. What's my thoughts on chart management? Number of charts open at a time on MT4. I don't really have any thoughts on it. You only need one. You can only, right. Answer to this question. Very simple. I used to have multiple MT4s running with every single FX pair, everything, single index, gold, oil, everything. So I could go, look at my amazing setup. How many pairs of eyes have you got? How many charts can you look at once? How many charts do you need open? I can glance over there and see what the DAX is doing and glance back, but I've only got one pair of eyes, right? If I've got 28 charts open, what am I getting? Information overload. What do? I have no idea because everything's just moving all over the place. Yeah, just look at one thing at a time. This is what the dashboard's for, yeah? This is why I built the dashboards. I can only look at one chart and do analysis on one thing because I've only got one brain that works and can do, I'm a man, I can't multitask. So Aussie dollar yen pings at me. I go and have a look at Aussie dollar yen. All you can do. So you don't need loads of charts open. If you want to do analysis without dashboards, without alerts, set a time alert. What I used to do is in Outlook, I used to set an alert to go off every 4 hours on the 4 hour to remind me of go and look at the chart. So every 4 hours, it would pop up in my Outlook and I would go, 4 hour candles have just closed. That looks good. Might want to look at a short on that, do some analysis. That looks good. Might want to do a short on that. Do some analysis. It's just hit yesterday's high and rejected. We've got a nice shooting star going in. Obviously, this candle isn't closed because it's got 30 minutes left on it, but that's what I do. And then you just go through the charts on the 4 hour. Every 4 hours, you just go like that. I can only look at one at a time, so that's your job. How long does it take you to scan through? 5 minutes? Do a little bit of analysis on anything that looks like it might be good. And then that's it. Done. Off we go. Do something else. Because the market's not going anywhere unless you're trading 5 minute charts and trying to scalp. And again, if you're trading 5 minute charts and trying to scalp, what you'll be waiting for is a setup. That's what alert dashboards are for. That's why I developed the market reversal alerts dashboard. Not for me, for scalpers. Because scalpers wanted to be alerted every time there was a reverse alert. So they could go and look at the charts and see if it was a recovery or a reversal that they would like to take an entry on. Dashboards simplify your life. You can only look at one thing, but you can monitor everything at once. And if there's conditions in the market that you're looking for me, RSI extensions and ADR extensions, I only need 2 dashboards. Every time they ping, I look at the charts. If they don't ping, there's no setups. There's no setups. I'm doing something else. So this sits here, and every hour or 4 hours, it pings at me if there's something to look at. If there's nothing to look at, there's no trades. The reason I built these is to stop over trading. If you are constantly looking at charts, it means you're looking for an opportunity to get into a trade. If you're trying to force an opportunity to get into a trade that doesn't exist based on a strategy that you're trading, you're going to overtrade. Overtrading is one of the biggest killers in trading. It's the ability to try and get into a trade when there isn't an opportunity because you just need to be in the market. You don't just need to be in the market. You need to be in the market at roughly the right time when the conditions are going to come back in your direction. So dashboards, simplify your life. Stop looking at charts as much as possible, really. UK 100, haven't got that. Don't think. That's US stocks. No, haven't got the FTSE. But I'd imagine it's doing the same as the Dow. Not a lot. We're waiting for the euro rates. Error code 5039. Google it. Too many parameters. Amount of parameters more than the format specifiers. I would say you possibly have got a data issue. Meaning if you're using the market reverse alerts EA, it's probably trying to calculate either an RSI or an ADR based on the timeframes you've selected without enough data. Could be. So try and load some data in. If you want to load data in, go to your chart, go to all the timeframes, and just keep hitting the home button and go back as far as you can. So that takes me back to April 1998. I now have all the daily candles loaded. H4, hit the home button, and keep hitting the home button. There you go, November 21, May 21. Just do that. That loads data in. Some brokers do, some brokers don't. It's very difficult to tell with brokers because they're all different. DW, if possible, please keep showing the other 3 VPS strategies. Interested how they perform market conditions. Where are we? So ADR reversals, everything will be in drawdown and everything will be doing massive drawdown control because there's squeezes on everywhere. So 4% up this month on ADR reversals, 14% drawdown. Euro yen and pound Swiss and Aussie yen are the only 3 issues there. Aussie yen is the main one. 3.45. Everything else is all within the norms. That's H1. H4, 22% this month loss. Bit of profit yesterday, 4.626 done today, 16% there. Aussie dollar Swiss, Aussie dollar yen. Everything else is kind of okay. Euro odd, but I wouldn't worry about that. Highly likely the euro is going to undo any movement today. So Aussie dollar Swiss is the main problem there. However, euro rally, Swiss rally, Aussie Swiss down. That will probably start to unravel as well. I'm not doing, bear in mind, all these are doing is they're there to show you every trade. They're not, it's there so we can look at every trade that's being taken. You would not expose yourself to that level. You would not do that much drawdown control because you wouldn't be in all these positions, and you will have done something about the Aussie Swiss with aggressive drawdown control position by now. So yeah, these VPSs I set up as a way to see all the trades, but in hindsight it's pointless because this figure would never happen because, and so would the profit, as well, when we look at it and it's made 28% profit in a month, it wouldn't make 28% profit because you wouldn't be in all of these, because you wouldn't expose yourself 6 times long on the yen, obviously, would you? So, and the drawdown control that's been done, you'd never do 4% of drawdown control in a day because you wouldn't be in enough. You'd only be in 2 pairs. So you would do 1 drawdown control a day, not however many it's done. Loads, I'd imagine. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Bloody hell. 24 drawdown controls in a day. Not going to happen. That just doesn't happen in the real world, does it? H1 hedging, 3.3 down, 1.96 on the month flat, 41% of drawdown. So yeah, I mean, this is in trouble. This was an experiment set up to see how this handled drawdown. It was max drawdown 25% for 3 months. So this is the worst it's been in, as you would expect, because it's been shorting the Australian dollar 4 weeks and longing the yen 4 weeks. But you can see all the trades. So the whole purpose of this is people saying, I'm in this pair on the H4 strategy. Can we have a look at it? Yes. I can see all the trades, but no one's doing that. So that's why I'm kind of not bothering looking at it, because there's no point, is there? The H1 obviously is my main strategy, which is why I'm trading this one in here. And I'm doing aggressive drawdown control, obviously, but I'm overexposed. You know, this is the account on the VPS. I can tell you for sure, I'm not in 6 Aussies short and 7 yens long. I adhere to my rules. Yeah, Aussie on New Zealand dollar still in that at the moment. Didn't quite get to my limit. So hopefully this will get a little bit of a rally back down later on the Euro news. So I'm back on at 220 this afternoon. I'm not going to come on early. I was thinking about coming on early for the rate, but obviously all we're going to do is sit there and watch the rate, watch the thing unfold. But yeah, 115 is when you want to be watching for the Euro, 130 for the US, and then 145 is when the Euro move proper starts, when the press conference is out. So press conference is 145. Typically, the first sort of 10 to 15 minutes of the press conference, Lagarde will have laid out all forward guidance. That's the point really where the market tends to go. Then there's a Q&A session. Sometimes there's a bombshell dropped in the Q&A session, but usually the press conference is her way of saying, and with the Fed, this is what we're planning moving forward. This is why we've done what we've done. This is why we're going to do what we're going to do, assuming the data holds it up. So this is where you get the movement. So usually 10 minutes, 15 minutes into that is where you will think, right, if we get a move going, that's probably where we're going to go. And then obviously tomorrow, that's going to remain at 0.1, minus 0.1. If it ever moves from minus 0.1, there will be a massive earthquake in the Forex markets, as you can see. It only goes back to January the 29th, 2016, and it's never been anything but 0.1. So I would give a 99% assurance that that is going to come out at minus 0.1 tomorrow. But we have got this press conference. So this is where we're going to see on Financial Juice tomorrow morning, we are closely monitoring Forex movements comment, which will be highlighted in red. And that's when we need to really start paying attention. If it doesn't come out tomorrow, that's fine. They may have another upper limit, but 140 is where they started saying it. I can't remember what day it was, but I'm not going to go all the way back. But if you go back on Financial Juice, if you want to, I'm the sort of person that needs everything proved to myself. So if you are like me and you want to, go back and look at the 29th of May, the 26th and the 29th of May on Financial Juice. You will see yen talk from the Bank of Japan, and they will be saying, we are closely monitoring FX movement. So the fact that the market, that's the Visa one, isn't it? But the fact that the market is preempting that as well, you know, they're all getting ready, holding on tight. The thing is with this as well, the other thing you got to think with the yen is because the market is expecting the intervention, the market will start to get out of, or start to buy the yen. Yeah. So they will suddenly start buying up yen because they're expecting the Japanese to intervene and buy a load of yen. So they will want to position themselves ready for that move. So what you find is you probably find that it will start to roll over before that comment even comes out, because the banks will be going, let's flip, guys, ready for the movement. Worst case scenario, if the movement doesn't happen, we can flip back very, very quickly. Yeah, we can't as retail, but they can. They can move it wherever the hell they want to. That's why the Bank of Japan is intervening, because they've moved it the way that they don't want to. But look at it now. The yen pairs, euro yen still rallying. Obviously, we've got the euro news coming today. But things like the pound yen, we're getting big old wicks starting to go in. We've had a bear move. We've just taken out that liquidity there. So it's all starting to flip. Right, I'll leave it there. Anything you need, let me know. I will be back this afternoon. That's a nice short. DAX. So let's quickly, before I go, what happened to the DAX? So we had the double-ended stop out. We took a long on the inside bar break there, which stopped out. And then we've taken the short inside bar break, which has hit TP, and we're trailing in profit. So if we get down to there, that's 3.5 grand. So far, we are down 2.3. So it puts $1,000 in profit. So if we can get a rally back down, like I said earlier, yeah, sell that high, buy that low. That TP at 5R is absolutely spot on for where I'd expect to bounce. In fact, I might just move that up ever so slightly. Oops, just moving it above previous day's level. Yeah, so this blue dotted line is the previous day's high, I think. Yeah, previous day's high. So that's obviously why we got the bounce there. So I'm just moving it above. So there's limit orders there. We know, we can see them. So there'll be limit orders triggering at the lows to bounce back up in the range for today. Obviously got to get there. It's probably going to stop out before that. It's highly unlikely we're going to get a big flush, but there you go. So made a little bit of a recovery on it. But really, yeah, it's highly likely we're going to sit at 2K down for the DAX this morning. So going to be reliant on the New York sesh to make some money. Right, I'll be back this afternoon, 2:20. Anything you need, let me know in the Telegram group. Otherwise, I'll be back then. I'm back to 7:50 tomorrow morning. Obviously, eyes peeled, 1:15, 1:30, 1:45. And when I come on, we'll try and unpick what the US is going to do and what the ECB announcements and rates have impacted the market and how that's changed. So we'll have a look at all that. All right, have a good day. Anything you need, let me know. Otherwise, I'll be back this afternoon or tomorrow morning. See you soon.